Welcome this morning to the Cern Basher Show with guest Randy Kirk. How you doing, Cern?
I am fantastic, Randy. How are you doing today?
I'm doing great. I'm fantastic. My shirt isn't matching the weather today. We are having another rainstorm in California coming in tomorrow in April. Now,
Hmm.
people talk about climate change. This would be a perfect example of climate change, but I'm not sure it's going in the direction of global warming. But it is definitely cold today and rain tomorrow. So who knows?
And that'll be followed by mudslide season and then forest fire season.
Forest fire season, and of course there's earthquake season thrown in there
Hmm.
somewhere. And then, of course, because we've had rain 2 years in a row, we'll have drought for 3 years. So
Fantastic.
it's a fascinating place to live. So,
Yes.
Cern, I understand that you've decided that Scott and you will continue to have some kind of communication through this channel.
We will, I think at this point, actually, this is the only way that we communicate. So thank you for having us on.
This is the whole reason that we do the Wednesday and Thursday shows.
That's right. To
Right.
facilitate discussion between Scott and I.
Right.
Greatly appreciate it.
Well, listen, anything I can do to help. So, and of course, you apparently have a slideshow for us. I would be so shocked if you didn't. So, I am prepared for you to put it up, and we can check out what you've learned this week.
Sounds good. And unlike Scott, I do come prepared. Scott just tends to wing it. He does a great job winging it, but
He
I bring
does.
some slides to the
You.
party.
Yes.
So first of all, this is again the theme of this early part of this slide presentation is dunking on Scott, by the way.
Okay.
So let's start here. On your show, he talked about having I think it was maybe 9 Canadian provinces and 2 territories.
Yeah. Yeah.
So there's actually 10,
Yes.
and there are now actually 3 territories. The
Okay.
Northwest Territory was split into two.
Uh-huh.
So Scott probably would have none of it if he was here.
Yes.
But anyway, this is for Scott. Hopefully he sees this and hopefully he memorizes this image.
Yes, and I will be visiting the Niagara Falls, Toronto, and Montreal here in later in April and early May. So I'm glad you gave me that map so I can kind of get my bearings.
Yeah, and Niagara Falls is not actually in this location. It's more down here.
Yeah,
And I don't know about these polar bears are more in the north.
yeah, yeah, yeah.
The wine region, having that in Oregon and Washington probably is pretty accurate.
Maybe yes, yes.
So Scott and I had a little bit of fun on April Fool's Day. I think you heard the story from him about how he put a user guide together.
Yes, I saw that. Yes.
He did a very shortcut method. He just put some photos up. He didn't even
Yeah.
put any work into it. I, on the other hand, put together a very well-crafted 12-page user manual.
I was totally impressed and in fact half fooled.
That's the intent with April Fool's Day is to not really quite know, right?
Exactly.
So what I did, Scott then posted that his post got more views than mine, which it did.
Yeah.
He did garner more views than mine. And so that puzzled me. And so I did a deep analysis of the followers that Scott has versus mine,
Oh yeah.
right? And here are the results. So the followers that we share are extremely smart people.
I see.
For people to follow Scott and I, that puts them in the Elon Musk league.
I see. I see.
So if you're one of those folks, congratulations, well done. The people that followed only Scott have determined that they, baby monkey is not quite the right term for them, but they're different than my CERN only followers. They're more
I see.
Yoda-like.
I see. I see.
So this is very scientific analysis. The Venn diagram proves it.
I I I'm totally impressed, and that you would put this out on 3 days after April Fool's Day.
Yeah, and I worked through the night the last 3 days to get this analysis complete. So yes, it's good, reliable data.
Okay,
Yeah.
cool.
And then finally, maybe Scott gets more views than me, but Scott has not had Elon give him an indirect compliment.
Oh,
So when I first put out my robotaxi model back in August,
uh-huh.
James Dalmo was kind enough to respond. And Elon responded to James and he said, "You understand, but few do."
Uh-huh.
So clearly, Elon was complimenting me in an indirect way.
Yes, he was. Absolutely, absolutely factual, factual.
I don't think Scott's ever had that from Elon.
Yeah.
So Scott can say what he wants, about him getting more views, but these are the facts.
I actually get people, I actually get Elon Musk responding to my content almost weekly, but usually I don't know it's a weird Elon Musk like 32 and Elon Musk
Hmm.
plus plus or something. I mean, I guess he has a whole bunch of accounts out there.
Yeah, and I think actually on this previous chart, there are a lot of bots actually that follow Scott. So
I see.
maybe the baby
Yes.
monkey's not the best representation. Yeah. And finally, this is a great cartoon, and I just want to clarify, this is not an image of Scott. It's Jay Powell, Fed chairman.
Yes.
So
Yeah.
he's saying happy thoughts and pixie dust. And the two gentlemen there, one's saying Peter Pan, and the other one says Jay Powell.
Yeah.
So
Well, he does seem, Jay does seem to be half solid as you go, no nonsense, don't make me laugh, and half, I don't want to let anybody down. Those would be so yeah, yeah,
he has a difficult job. It's hard to please everybody, let alone anybody.
right.
Yeah. So, did you know that US households saw their net worth increase by $11 trillion last year?
11 trillion.
Now, it's a little bit puzzling to me because I've come into possession of this, which is a $100 trillion note.
I see. Yeah.
So I think it means then that everybody else lost 90 trillion and I gained 100. So the net, 11-ish. Um, but yeah, I'm probably the first 100 trillionaire that you've ever met.
Maybe that could be true.
And this is real, but it's from Zimbabwe, so I don't really know what it's worth.
Worth.
But anyway, this is pretty impressive. Really just a couple of big down years. Otherwise, it's pretty steady progress.
Yeah. 11 trillion. Well, yeah.
Now
Does does
it's
it get broken down into stocks and houses and
it's everything. Yeah, I don't know exactly how
yeah,
this is
yeah,
calculated, but it's the value of everything, businesses and publicly traded stocks and homes and everything else. Yep.
right.
Now, it didn't get that way because of people winning lotteries, but interestingly, 113 billion is spent every year on lottery tickets, which is
Wow.
a staggering number.
Do we have the amount that I'd be interested in with that one would be how much is paid out?
Well, less than half, I think, isn't it?
Less than half. Okay. All right.
Yeah, the lotteries are pretty profitable enterprises for the sponsors.
Right, right.
Yeah. So anyway, that was more than what people spend on movies, books, concerts, and sports tickets combined,
Combined.
which
Oh,
I found kind of shocking because as big as sports is in this country, that was a shock to me.
wow. Holy.
Yeah. So if that's your road to riches, good luck. The
Yes.
chance of winning Mega Millions is 1 in 300 million. Powerball about the same.
Yeah. Yeah.
So let's talk about some stocks. Year to date, these are the best performing stocks in the S&P 500.
Okay.
You might have heard of a few of these. NVIDIA is a little company that's done pretty well.
Yep.
But the number one company is a company called Super Microcomputer.
Mm-hmm.
And they're kind of piggybacking on NVIDIA's success.
Yes.
We'll talk about them a little bit more in a second, but down the list, you can see a pretty good, smattering of companies. They're not all AI companies,
Mm-hmm.
right? So it's an interesting list.
Yeah, you see a petroleum company, you also see Disney recovering. So it doesn't necessarily always mean that this company is continuing to ramp. I think General Electric might also be recovering. So
That's right.
yep, yep, yep.
Yep. And then here's Supermicro. If you recall from last week, we showed a similar chart for NVIDIA and the projections for the next few years as far as revenue goes.
Yeah.
So the company forecast this year is for about 25 billion in revenue. And I'm sorry, it's about 13, almost 14 billion, close to 15 billion in revenue for this year. And the
Okay.
projections by analysts in 2026 are about 25 billion.
Wow.
Um, and that would be triple the 7 billion that they recorded in the last fiscal year. So pretty phenomenal growth if this transpires.
Right.
And then we should also look at the worst performing stocks. Close your eyes and ignore the one on the top.
Right.
But Boeing's up there, and some other well-known names. We talked about Lululemon, I think it was last week.
Yeah. So this morning after the news, Boeing and Tesla might have changed places though, because Tesla had the good news of stuff happening in India, and Boeing had a scathing article about their DEI and ERG destroying the company over the last 10 years. So it might be reversed.
These things are always in flux.
That's
Yes.
true. Yes.
Yeah, this is as of the end of the quarter, so it's a few days old now.
Yeah.
And then this is comparing Tesla to a bunch of other automakers. And over the last year, the last 12 months, Tesla has gone down 20%. The Toyota is up 71%, Stellantis up 65, Ferrari up 56, Honda up 40, and so on. So the rest of the auto industry right now may be feeling pretty good relative to Tesla in
Yeah.
terms of how stocks have done.
Again, those would all be recoveries.
Yeah. Yeah. Yeah, these are all snapshots in time, and depending on when you start and when you end, you get some very different numbers. Extend this time horizon out a few years, and Tesla would be at the top of the list.
Right.
We keep talking about the Magnificent Seven, and over the last year, the Magnificent Seven stocks grew their earnings by 37%, while the remaining 493 companies in the S&P saw a 2% decline.
Wow.
Now, that trend is expected to reverse. And if that's the case, then that's good news for the other 493 companies.
Mm-hmm.
But we shall see.
Right.
Okay.
Yep.
Now, if you're tired of talking about the Mag 7, I have a new list of companies for you to follow.
Okay.
Have you heard about the granolas?
I have not.
This is Europe's Magnificent 11.
Aha.
And they're called the granolas. And I guess they couldn't come up with a word with 11 letters. So given that a bunch of them start with S and a bunch of them start with L, they just compile those together.
I got it.
Okay, and same thing with N. So I'm guessing that GSK is the G and Roche is the R and so on down the list. But these are the companies that are Europe's Magnificent 11.
Mm-hmm.
Okay.
Yeah.
So we'll see. We'll see if this sticks. See if we're talking about the granolas a year from now.
And what is the number at the bottom of each of those? Is that
I believe that's the market cap.
the market cap? So you'd have to put a bunch of these together to even get to Apple.
You would.
Maybe all of them. Yeah, I think so.
Maybe.
Almost all of them. And if you were talking, so now Apple's no longer number one, Microsoft. I'm guessing you might have to put all of them together to get to Microsoft.
Yeah, amazing, isn't it?
Yeah.
And these are, there's some pretty big companies, there's some pretty big household names.
Yeah.
Right. Yeah, it's amazing. So the S&P has been hitting a few all-time highs so far this year. We've hit 22 all-time highs so far in 2024.
Yeah.
None last year and only one the year before. So I guess we're overdue for hitting all-time highs. And you can see on this chart in the blue highlighted sections, when the S&P hits an all-time high during the year, it typically does it, more than once.
Right.
So this is no big surprise that we've had 22 so far this year. Looks like the best year was 1995, where there were 77 days with an all-time high that was seen. And that was just the start of things to come, because 96, 97, 98, 99, and even 2000 continued to see new all-time highs.
Yeah.
That was quite a run there in the decade of the 1990s.
So those were a lot of all-time highs, but in terms of the run up recently, I remember the stat right, up 30% in 5 months is a record. Something
I
like,
recall hearing that, yes.
and so as an analyst, instead of just a somebody who puts up great slideshows, as an analyst, are you concerned that it might be correction time?
Um, that's always a possibility. I'm not concerned just based on the number, just because something has broken a record and gone up faster than it ever has before. That doesn't necessarily concern me on the surface. There might well be some very good reasons for that, and I think there are, where we're coming out of a weaker economic period, prospect of the Federal Reserve cutting rates, although we'll talk about that in a minute. That
Okay.
prospect is dimming a little bit. Um, there's some good fundamental reasons for it. I know a lot of people are concerned about valuations again. Um, but it remains to be seen whether those are warranted or not. Certainly, there's a lot of excitement about AI and the growth potential there.
Mm-hmm.
And I think that the prospects for AI are a lot greater than the prospects were for the internet in the late 1990s. I mean, this is truly an opportunity for all companies
Right.
to save money and to grow. The internet was as well, but it took a lot longer.
Right. 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 Yeah, this is happening very rapidly.
Yeah. Um, if you bought, we've talked about this before, but this one's comparing it to the international index. If you bought the S&P at its peak in March of 2000 and held it through today, so 24 years,
Mm-hmm.
you would be up 438%. So that's a 7.3% annual return
Right.
if you had really bad timing in March of 2000. Now, over the same time period, the international index, the MSI World Index, actually, this is world, so this is the whole globe,
Okay.
is up 6.1%.
6.1.
Now, if you back out the United States, it's a lot lower than that.
Yeah.
Okay. And this is kind of interesting too. As an investor, we're all so focused on trying to buy and when the time is right.
Mm-hmm.
One of the great tried and true methods is invest the money when you have it
Right.
and invest over time. And this just shows how you could improve that lump sum investment in March of 2000, which produced 7.3%. If you bought in annually, dollar cost average every year, you could have improved that return to 10.7%.
Hmm.
Just
Yep.
methodically buying every year.
Yeah.
Um, I'm curious as to what it might have been if you would have just dollar cost average every month. It's probably fairly similar. It might even be better than the 10.7.
Yeah.
You just take advantage of buying those dips. So just a good thing to keep in mind for those people that are putting money to work. Just keep doing it. Forget about it. It'll be fine. So let's talk about something that's kind of comes and goes in terms of fads. That's dividends. When I started my career in the early 90s, dividend investing was kind of a big deal.
Mm-hmm.
But over time, dividend yields have come down and companies have de-emphasized dividends. Many companies have. Some still pay their dividends, and some companies have nice dividend growth, and that's kind of interesting over time. But particularly as interest rates came down, I think companies felt that they didn't need to compete with bonds,
Sure.
right? And also they discovered that share buybacks might be an easier way, and something that people didn't necessarily require them to do each and every year. They could be more selective about when they bought back their stock. Whereas once you start paying a dividend, people tend to rely on it and they
Yeah.
want you to continue.
Yeah.
But anyway, the current dividend for the S&P 500, the current dividend yield is 1.35%. So fairly low by historical standards. similar right now to what it was in the late 1990s.
And has not necessarily tried to compete with the higher treasury offerings right now. Yeah.
No, no. I think people have thought that that would be temporary.
Yeah.
That does remain to be seen, but that's the belief. For some historical perspective, let's take a look at the yield on the US 10-year going all the way back to the late 1700s.
Wow.
So talk about long-term perspective, but you can really see some big long-term trends. From 1842, when the 10-year was at 11.5%, over the subsequent 57 years, it dropped to 3.7%. And then rose for 20 years to 1920, peaked at 7.2%, and then saw a 26-year decline to 1946, 1.5%, and then saw a 35-year rise up to 15.8% in 1981, and then a 40-year decline all the way down to almost 0.5% in 2020. And now we've had an increase again up to currently 4.2%. So just good long-term perspective over the last couple of 100 years on where interest rates have gone.
Yeah. Yeah. That's really interesting. Like that one.
So, is this upswing that we've seen now part of a longer term upward trend? Or is it a blip and we'll head back down again?
Yeah, and there's probably some great analysis that could be done of reasons why, but that's a whole nother show.
Yeah. Yeah, there's probably a 4-hour show on all
Right,
that.
right.
Now, if you were a bond investor, this has been one of the worst times ever to be investing in bonds. You might have to go back to the 1840s to find a time when it was worse.
Wow.
We've had two back-to-back pretty big negative years in the bond index. There were 3 years in the late 1960s that were negative. 1931, 32 were pretty bad, but it was the 1840s. So there's not too many people around today that remember any of that, any of those periods.
And
Anyway,
and of course, this has rocked the banking industry. I read yesterday a headline where Bank of America's loss on the bonds might be at $100 billion.
yeah,
Hard to fathom.
yeah. But when you've got 100 trillion,
I know, I know. I mean,
what's 100 billion?
no big deal for you.
No big deal. Money market funds. We're kind of covering a whole broad range of things today,
Yeah,
but money market
yeah.
funds, current yield about 5.3%. Yes, it's a 7-day net yield. And the amount of money in money market funds right now is over 6 trillion. And that's up from, 4 to 5 trillion, the last couple of years. But from a year ago, there's been about $1 trillion or more added to money market funds. So the question is, does a better economy free up any of that capital? Does it flow into the markets in some way?
Right. Yeah.
Particularly if the Fed does cut rates, then that might put some pressure on money market funds and people may decide to go elsewhere with some of that money.
That's interesting that and I don't have much understanding of the money market funds. So they're basically at the same level as the Fed's overnight rate, the 5.25. Is it and about what would that be? 125 basis points higher than the treasuries. Is that spread fairly normal, 125 basis points?
Well, normally you would expect short-term rates to be lower than longer-term rates.
Oh, yeah.
Normally, but we don't live in normal times anymore.
No.
That ended some time ago, Randy.
Right.
Yeah. And maybe we go back to the 1842 chart. What was normal in the
Yes.
last years? I mean, that's a
Yeah.
good question too.
Yeah.
So another little cartoon. How many, I guess, clowns in Powell? Looks like a reporter trying to meet a deadline. He's trying to spell Powell's name correctly.
I see.
He's a great target to make fun of.
He is. Yes. He seems like a
But
very nice man, though.
I'm sure he is.
Yes.
Yeah. So now expectations for cutting rates in June
Yeah.
are now down to mid 50%. So that's come down a bit. I forget what it was the last time we looked at it. I think it might have been the 70s
Yeah.
a few weeks ago.
Yeah.
So people are now expecting 3 rate cuts. They were expecting 7 this year, but now the expectation is for only 3.
And I would expect that these expectations will all change tomorrow, one way or the other.
Yeah. With data that will be revised.
Yes, the job numbers, I think, will have a big impact. One now, again, maybe the job thing turns out to be a nothing burger, and there's nothing, there's no real read out of it, that it's just, economy flat, staying, not going anywhere. But generally speaking, I'm anticipating that tomorrow's job numbers will have an impact.
Yeah. The conspiracy theorist in me, which is a very tiny sliver of who I am, says that the job numbers will be good.
Yes.
Because in an election year, you want to show good job growth.
Yes. So I have been warning this channel, and maybe you'll be in agreement. I have no interest in knowing what the headline number is tomorrow, because I don't
Yeah.
trust the headline number at all. Now,
Right.
I've read a bunch of articles about how that headline number gets revised, and it has to do with the speed with which the states are turning in their information. And when you're in a recessionary, when you are in a troubled economy, the states tend to be slower, apparently. This is a Cathie Wood statement. And so if you look over history, maybe you even brought this up a couple of weeks ago, Cern, I can't remember, you might have, is that there's a tendency for these numbers to be revised negatively in
Yes.
a troubled economy. Either way, whether we're conspiracy theorists or whether we are just looking at the stats, the reality is that headline number has been useless as a guide. But the revisions, those turn out to be somewhat useful, but I don't know if the street's paying attention to the revisions. But I'm telling my clients here on my audience, pay attention to the revisions and pay attention to the trends. Pay attention to the work week. Pay attention to what people are being paid compared to what they were paid last year. Those, I think, are going to impact a week from now, maybe even if tomorrow morning it's the headline that gets all the attention.
The revisions don't make the news.
Yes.
Yep. So this is a chart that shows rate expectations at different points in time. The green line is the May meeting. The blue line is June and the red line is July. So where we are here is on the far right-hand side of this chart. So if we want to look at the June meeting, the blue line, back in January, people were expecting 100% chance of a rate cut.
Right.
And now it's come down to about 60%. The May, which was green, it touched 100 earlier this year, and now is basically at 5%, almost 0. So this is just a chart that shows how changing expectations, how things have changed this year with the different rate cuts.
Yes.
Okay. In July, that expectations come down from 100% down to about 73%. Okay. And this is the odds of cutting the rate, 25 basis points.
Exactly.
So there's even some doubt by July whether or not we'll get the cut. It's not 100% anymore.
Yeah.
Okay. All right. This is kind of a crazy chart, but let's look at the GDP growth since the lockdowns ended. So this goes back to the fourth quarter of 2020. The economy actually was pretty strong. We pumped money into the economy. GDP was growing at 4, 5, 6, 7%. And then we had a little bit of a fall off We had a couple of negative quarters. It was not called a recession. And then since then, things have been pretty steady.
Mhm.
And the expectation for this quarter is in the 2.5 range.
Mhm. Mhm.
So interesting times. Again, not normal. We'll see.
Right.
Okay. Gasoline prices. We talked about this before. We talked about how they were going up. I wanted to give some context this time in terms of how this compares to the last 3 years.
Okay.
And it's consistent with what we saw last year. It's not like 2022, where by this time gas prices were, 440,
Right.
and not like 2021, where gas prices were 290 or so, perhaps. So nothing crazy about what's going on with gas prices right now. I just wanted to give some context there because we showed a chart, I think, where there was a pretty big increase.
Yes.
And I just want people to be aware that that's pretty normal. At least it has been in the last few years.
Right.
All right, another great one. We have, I guess, Uncle Sam here. Looks like more of a bear, but it's holding the inflationary balloon. I guess this is Winnie the Pooh.
There
Uh,
you go. Yeah. Yeah.
yeah, and he's saying, "Oh, bother!
Yes.
Inflation's kind of gotten out of hand, and he's floating away." Yeah, it says with apologies to Winnie the Pooh. So anyway, that was cute. Complete transition to space. But I guess the balloon is he's going up into space. So
There
maybe
you
my
go. There's the
transition
transition.
is so bad. I just need to get better at verbalizing the transition, perhaps.
Yeah.
But this is a pretty amazing chart that shows the number of objects launched into space by the United States and the rest of the world over time.
Mm-hmm.
So in 1969, the year of the moon landing, we launched 138 objects were launched into space, the US and the world combined.
Yep.
And last year, the rest of the world launched almost 500 objects into space, and the United States alone launched 2,166. Were sent into Earth's orbit or beyond in 2023.
And how many of those were SpaceX?
Probably the vast majority.
Majority.
Yeah, this is pretty phenomenal. So we're definitely seeing an explosion in activity in space.
Yep.
Whole new industries and new opportunities are forming, and it's being built on the backs of SpaceX. Yeah. Just a quick aside, there's a really interesting company. This is not investment advice. It's a company called Planet. It used to be called Planet Labs. And they have a constellation of satellites that they launch on SpaceX. Their satellites take an image of every piece of land on Earth every day.
Wow.
And they have like a Google-like database of Earth imagery going back, I think, 6 years. So it's kind of like the Google of Earth's data.
Yeah.
And it's just a fascinating company. So the creation of whole new industries and whole new companies is now possible because
Right.
we launch stuff into space so cheaply.
Yeah.
Really interesting company. Okay, we're at our quiz time, Randy. This is a quiz for you again. Okay, this one's real easy. Okay, extra guac adds up. Sales have grown 65 times since 2001. What company is this?
That their sales have grown 65 times since 2001. Yeah, you got me on that one.
All right, I've given you some tough ones. This is Chipotle.
Okay. Wow.
A pretty phenomenal growth.
That is. Holy mackerel.
Yeah. And it looks like raising menu prices in 2022 was very helpful for their revenue.
Yeah, and talk about an overcomer. We see that
Yeah.
2015 setback, and yet they just took right back off again.
Yeah.
So,
Yeah.
kudos to that management team.
22% compounded annual growth rate since 2001.
Wow.
132 million in revenue to 8.6 billion.
Huh.
So who says the restaurant business is a bad business to be in?
Yeah, right.
I give you this chart. Yeah. Okay. Speaking of up and to the right, this is just daily flows into all the spot Bitcoin ETFs. They've gathered about 12 billion in assets so far. And I think they have been trading now for 50 some days. So this is an interesting one to watch. They're absorbing some fairly decent amounts of capital.
Yeah. Wow.
Okay.
Hmm.
Um, and lastly, where do people live? So forget about red states and blue states. I give you blue and orange. Orange or blue is where half of the people live. Okay. So obviously major metro centers. It's just kind of interesting. I guess this is kind of by county,
Oh yeah. Hmm.
right? Um, half of the people live in those blue counties.
Yeah. And the fascinating thing is to looking at Texas and Florida, as the country has moved towards those two states in a dramatic fashion uh, over the last 10 or so years.
Yeah. Yeah. Now, unfortunately, if you live in Alaska and Hawaii, I guess you don't count.
There you go.
So apologies to those two states. I didn't make this chart, so don't be upset with me. Um, but yeah, no, it's fascinating. So
Okay. Oh,
that
yeah. And that was it. So,
that was it. Yeah.
hate to, try to catch you. I'll ask you a question. I'll have a quiz for you.
Hmm.
Morning, I made a big deal about the fact that gold is at all-time highs day after day after day after day. It's at all-time highs. Oil now is completely recovered all of its losses from last year. And it's now, looking like it might go back to 100 on the past 90 at least any day now. At the same time, that the dollar is at huge highs. These typically go in opposite directions. So the quiz question, which I have not been able to answer for myself this morning, is what impact might that have, or what could we glean from that?
The answer is obvious, and I've got the perfect prop today is this.
Okay.
People in many other countries outside the United States have currency that is deflating rather rapidly.
I see.
Right. We have a problem in our country too with just printing of money.
Sure.
But if you think that's a problem, then go to Lebanon and go to Turkey and go to Brazil and Argentina, and the list goes on and on and on and on.
Yeah.
So if you're in those countries, you want to own something that's a good store value. And chances are gold is going to be the thing that's likely the most convenient and easy to buy.
Mm-hmm, mm-hmm.
Bitcoin for some, but in other countries, it's just not possible. So I think that's a big part that's driving it. There may also be a part on the central banks of those countries also to try to shore up their currency and build some reserves.
Mm-hmm.
So gold has historically been a decent way to do that. That's what I think is going on. And I think the United States dollar strength is something completely different. That's based on the strength of our economy.
Of the economy. Mm-hmm.
Right. And our interest rates are still relatively higher than many other places. And some of those other nations have already started to cut.
Yeah.
So that makes our dollar strong because that attracts capital at the higher rate.
Right.
If we end up cutting more than perhaps some of these other nations, then maybe the dollar would weaken at that point.
And then but then gold theoretically would actually be higher still because of that inverse relationship that normally takes place.
Yeah.
So no, not investment advice, but gold seems like a potentially good investment. Although maybe it's already out over its skis. I don't know.
I don't have an opinion on that. Yeah, not investment advice, but I think that's an explanation of what might be going on.
Okay. All right. Well, that's great, Cern. I understand that you have some even more charts, even more graphs, even more of this kind of stuff that we will deal with potentially on Friday. And so, as always, thank you for bringing a broad view of all kinds of things around the world that are taking place, and in such a stimulating and visual way.
My pleasure. And I might say too that I won't be bashing on Scott in the next videos. So don't worry about that, all the Scott fans out there.
Well, so, and you use the bashing verb specifically.
Because that's what Scott refers to me. He calls me the basher. So
The basher.
I'll lean into that and say I won't bash him in the next videos.
Okay. Well, Mr. Basher, it's really been good having you on again. And until tomorrow, to all of you out there, it's been great talking to you.
Thanks, Randy.